New tax rules went into effect April 1st, 2026, and most people have no idea these changes exist. If you filed your taxes already, you might have left thousands on the table. In the next 11 minutes, I'm breaking down what changed, what credits you're missing, and how to maximize your refund step by step. Let's go! Welcome to Daily Money Mindset. If you want to understand tax changes that actually put money back in your pocket, you're in the right place. Hit subscribe. We drop strategies every Monday, Wednesday, Friday. Here's what happened. The new Income Tax Act took effect April 1st in multiple countries, including major changes to rebates, deductions, and filing requirements. In the U.S., several provisions from recent tax legislation are now active for the 2026 tax year. Most people won't hear about these until next April when they file. By then, it's too late to optimize. Let me walk you through what changed and what you need to do now, not next year. Change number 1. Higher standard deduction and expanded rebates. For 2026, the standard deduction increased. Single filers, $14,600. Married filing jointly, $29,200. If you're not itemizing, this is your automatic deduction. It lowers your taxable income before calculating what you owe. But here's the part people miss. In some tax regimes, the rebate structure also changed. You can now earn up to certain thresholds with zero tax owed after rebates. Example, if your taxable income after deductions is under $12,000, depending on your situation, rebates could reduce your tax liability to zero. This means if you're a low to moderate earner, you might owe nothing and get every dollar of withholding refunded. Most people don't optimize their W-4 to stop over-withholding. They're giving the government an interest-free loan all year, then celebrating a refund in April. That's your money. Stop letting them hold it. The move. Use the IRS withholding calculator now. Adjust your W-4 so your refund next April is close to zero. Take that extra money in every paycheck and invest it monthly. A $2,000 refund is $167 per month you could have been investing. Over 10 years at 8%, that's $30,000. Change number 2. Expanded child tax credit and dependent care credits. The child tax credit for 2026 is $2,000 per qualifying child under 17. But the refundable portion, the amount you can get even if you owe zero taxes, increased to $1,700 per child. If you have 2 kids, that's $3,400 you can get back even if your tax liability is zero. Most people don't realize this is refundable. They think, I don't owe taxes, so I don't get the credit. Wrong. File your return, claim the credit, get the refund. Also, the dependent care credit got more generous. If you're paying for daycare or after-school care for kids under 13, you can claim a percentage of up to $8,000 in expenses for one child, $16,000 for 2 or more. Depending on your income, that's up to 35% back. $8,000 times 35% is $2,800. If you're paying daycare and not claiming this, you're leaving thousands on the table. The move. Keep receipts for all childcare expenses. Daycare, summer camp, after-school programs. If it's care while you work, it counts. At tax time, claim every dollar. Change number 3. Energy efficiency and home improvement credits. If you installed solar panels, energy-efficient windows, heat pumps, or insulation in 2026, you can claim the Residential Clean Energy Credit. Solar installations, 30% of cost back as a tax credit, no cap. So if you spent $30,000 on solar, that's $9,000 off your taxes. Not a deduction, a credit. Dollar for dollar reduction. Heat pumps, windows, insulation. Up to $1,200 for qualified improvements, plus $2,000 for heat pump systems. Total possible credit, $3,200. Here's the key. This is a credit, not a deduction. A deduction lowers taxable income. A credit lowers your actual tax bill. If you owe $5,000 in taxes and have a 3,000 credit, you now owe 2,000. Way more valuable. Most people doing home upgrades have no idea these credits exist. Contractors don't tell you. You pay 30,000 for new windows, save 200 a year on energy, and miss the 1,200 credit that pays for itself in year 1. The move. If you're planning any home efficiency upgrades, do them before end of 2026. Keep all receipts and manufacturer certifications. At tax time, file Form 5763 for energy credits. Change number 4. Retirement contribution limits increased. For 2026, 401k limit is 23,000. If you're 50 or older, catch-up contributions are 7,500. Total, 30,500. IRA limits, 7,500, 8,600 if 50 plus. These lower your taxable income now. If you're in the 22% bracket and max a 401k at 23,000, that's 5,000 in tax savings this year. The move. Increase your contribution by 1% every quarter. Over 20 years, that's an extra 200,000 in retirement. Change number 5. Student loan interest deduction capped at 2,500, but income-driven repayment forgiveness timelines shortened, and forgiven amounts may not be taxable. If you're on IDR and hitting forgiveness, that balance used to be taxable income. Under new rules, PSLF and some IDR forgiveness may be tax-free. 100,000 forgiven used to create a 30,000 tax bomb. Now, potentially 0. The move. Confirm your loan servicer tracks payments correctly. Double-check annually. Change number 6. Earned income tax credit expanded. For 2026, income limits and credit amounts increased. Single with no kids making under 18,000 could get 600. 3+ kids, over 7,000. This is refundable. Even owing 0 taxes, you get the money. Millions don't claim it. The move. If you made under 60,000 with kids, run the EITC calculator. File even if income is low. Change number 7. Health savings account limits up. HSA limits. 4,100 individuals, 8,300 families. 55 plus add 1,000. HSAs are triple tax advantaged. Pre-tax contributions, tax-free growth, tax-free withdrawals for medical expenses. Best retirement account nobody uses. Invest HSA funds in index funds. Let it grow 30 years. At 65, withdraw for any reason penalty-free or use for medical expenses, tax-free forever. The move. If you have high-deductible health plan, open HSA and max it. Pay medical expenses out of pocket. Let HSA grow. 30 years creates 6-figure tax-free medical fund. Change number 8. SALT deduction capped at 10,000. State and local taxes remain capped even if you paid way more. High-tax state paying 20,000 in state income tax plus property tax? Only deduct 10. Hurts high earners in high-tax states. The move. If paying over 10,000 and mobile, run numbers on relocating to no income tax states like Florida, Texas, Nevada. Common mistakes. 1. Not tracking deductible expenses year-round. 2. Filing too early and missing credits. 3. Not adjusting withholding. Huge refund last year? Over-withholding. Fix it. 4. Using tax software and skipping questions about energy credits, education, HSA. People click no and lose thousands. 5. Waiting until December for retirement contributions. Missing months of growth. Automate in January. Your action plan. 1. Use IRS withholding calculator. Adjust W-4 today. 2. Kids? Claim child tax credit and dependent care credit. 3. Home energy improvements? Save receipts. File Form 5763. 4. Max retirement contributions. 5. Low to moderate income? Check EITC eligibility. 6. Track every deductible expense now. Don't wait for April. 7. HSA eligible? Max it and invest. 8. Student loans on IDR? Verify servicer tracks correctly. 9. Energy upgrades planned? Due before year-end for credits. 10. Got huge refund last year? Stop over-withholding. Invest the difference monthly. These changes are permanent unless Congress revises. Optimize now. Most people wait until tax season, then realize they missed thousands in credits and deductions they can't claim retroactively. Don't be most people. Act in the moment when you can still capture value. A $2,000 energy credit you don't claim because you threw away the receipt? Gone. Can't fix it next year. The time to optimize is now while the year is active and you can still make moves. Drop a comment. Which tax change affects you most? Are you maxing HSA? Claiming energy credits? Adjusting withholding? Let me know. Hit like, subscribe, grab our tax deduction checklist in description. Next video, passive income strategies actually working in 2026. See you next week.